following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Good to be back. It's like a 6-day crazy trip with about 5 cities involved for me last week. And I thought I was going to be able to do the show a little more often. But, man, when you're traveling, weird things happen and delays happen. Planes change their times they're going to take off. And connections aren't good sometimes in places that you think they're going to be good. So I apologize. And the 1 or 2 shows I did do last week, I, again, didn't have the real estate to really do a lot of screen sharing like I wanted to, so my apologies, but good to be back. Hope you guys had a good last week. And this thing in Orlando goes without saying, just a terrible event. You know, I keep thinking, you know, how do you stop these types of things? It's not more than likely restricting everybody from having a gun in the United States, but you know, you think about how did successful societies deal with situations like this before? They did some pretty heinous things, you know, to stop things like this. I mean, sometimes you got to fight fire with fire, and you know, there's some crazy folks out there right now, and a lot of them are in the spirit of, you know, reading, you know, the Quran in a certain way. You know, I mean, I'm not into religion this morning, but if, you know, you can read the New Testament, the Old Testament, I mean, you could read them certain ways and decipher what you want to out of those particular scripts. And I was, you know, the Old Testament, I mean, some of the biggest heroes in the Old Testament are the people that are the folks that killed the most people. I mean, the Sauls in there, the Davids, the Joshua's, and you know, you can read into those things a million different ways. It's just completely astounds me how some of these people get whacked out and you know, take this as what some human beings wrote down as God's word. It's just amazing. You know, you look at the Romans, how they dealt with it. You know, they had some people who were rebellious. They went in and found out who the guy's town was and just basically bulldozed and eradicated, killed everybody. And that kind of sent a message. If anybody does this, I'm not saying we need to do that, but we're going to have to start fighting fire with this stuff. And it's amazing. All right. So that's enough of my history there. It's a terrible event. I can't wait to take it to the next level with these people. Taking a look at the S&Ps, a couple of things also I want to point out before we get started here. Now that I brought the dark clouds on top of us this morning. We added the Philippines to the heat grid, also the ASX 200. You'll see those in here. And if you go into the scanner, and there it is, Australian ASX 200, you can click on the symbol in the heat grid there and actually see Australian stocks. If you've got, you know, a broker that allows you to trade pretty much everything on the globe, there's quite a few of them out there now. I don't know if Thinkorswim has that yet, but I mean, basically it's just an API link away. A lot of these, there's major order routing hubs now that really accomplish trading the globe. So we've got now 19 different indices and Forex and futures on here. So I'm going to call that 21 markets, but just letting you know, we also have the Philippines in here if you ever want to look at that. Is my screen stuck? Okay. Some great companies in the Philippine Stock Exchange. They just go straight north. Never seen anything like it. All right. A couple other things we want to mention this morning. We're going to go right into the S&Ps. And, you know, we've been looking at the dollar situation and all these relativity trades and the S&Ps. One thing I want to point out before we go to that, this is a picture of the VIX of the VIX, so the volatility of the volatility index. I don't do a lot of this type of stuff. If you've watched this show, you know that, but there's a couple of spreads that have really been getting out of whack here, and this is one of them. So we're talking about the volatility of the VIX index, and the VIX index is a volatility play anyway, so you're talking about the volatility of the volatility. So as this thing continues to climb, this is not the best sign in the world, as we're at pretty much a market top, that this type of scenario is building. And I know that as you look at this, we switched to the September contract, very similar profiles to the June contract. But here's the S&Ps. We talked about that 2083 on the June contract. Well, that number on a relative scale is about 2075 on the September contract here. So there's, you know, the other week we kind of came back and retested. This is again the September contract. We've got 2075 sitting here. We also have on the S&Ps our breadth situation. We're more than likely going to have, and I'm going to just give you a stat here. We're down about 5.5 points this morning on the S&Ps, trading about 2081 on the September contract. So as I go back into this scanner, okay, just looking at the den there. As we go back into the scanner, you know, the breadth situation is going to be a little mixed up now. And when you don't have a clear path in the internals, the long term is still really positive. But we're going to have some situations now where the daily is more than likely going to fold over into negative territory. Doesn't have to. It looks like it's sitting on the precipice. And when we're sitting on the precipice, you know, anything can happen around this 2075 now. Considering what I just said, we've got a lot of economic events coming up this week. Let me throw those out there too. And we're going to talk about Facebook a little bit later as a stock we're going to focus on today. You've got a big Apple conference today. You got some FOMC minutes or statements probably coming out on Wednesday. CPI on Thursday. You got retail sales this week. You got just a host of things that are going to kind of herky-jerky the market around here. And 2075, I don't know if it's going to hold, but, you know, backing up and just looking at pure technicals and looking at this kind of spinning around above profiles, you've got to be looking at this as, you know, we could continue higher. The volatility spread that I just showed you and the way that works out usually is usually a forebearer of a market sell-off. But right now we've got long-term breadth, 2075, 2077, major inflection points down here, long-term breadth positive. We could get a little bit of a pop here. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back. We're going to look at a couple of stocks here really quick. We talked about the S&Ps. Let's just finish up with that first. I mean, the final statement on this is, whether you like it or not, 2075 weekly unfair highs, 2077 daily unfair lows. We've kind of popped off of there this morning. We've reached a I wouldn't call it popped. What do I call it? Let me just pull up my thing so I can see it here. Reached the low of 2077, and we've gotten back high of 2084, so we're back in 2081. So just kind of languishing down here. Looking at the breadth, looking at the internals, we could have a little bit of a pop here, but make sure you put your stops down below. I'm actually personally waiting for us to get below 2077, 2075, and then look at the breadth, look at the internals, and say, hey, we've got a mixed bag, and we might start getting some momentum on the downside. That's my stance on it. So let's take a look at the dollar really quick before we start hitting some stocks. This is a September contract. Here's where we're at on the weekly. And when again, we're trying to build. What happened? Did I lose? There's weekly, there's 240. I have lost the daily chart. Let me reopen this. I think we'll be straightened out here if I don't save it. Sorry, guys. Let me get eSignal back open. We're going to look at Facebook today in just a little bit after we get our eSignal back up. Voila. Here we go. So taking a look at the September dollar. Come on. Okay. So we've had a pretty good retracement, 94.39 and a half. That's going to be your area of, the contra trade possibly back up on the dollar. That's going to be support now in this. And why am I talking about support? Because, we're pretty far below profiles on the weekly. We more than likely are going to at some point have a new profile appear. And it looks like, to me, on the weekly, we could retrace back up into that previous profile unfair low 97.95. Let's just call it 98. Not going to go there in a straight line, but it looks like, you know, we really need to have another weekly profile down here. And right now, for that to climb higher and go into force, 94.39 is going to be support on it. I know that probably didn't make a lot of sense, but I think the dollar has a better chance to retrace up than it does to continue to sell off here. All right, so let's take a look at the DAX really quick. This is September in the DAX. Here's the situation here. You know, this Brexit thing and a couple other, you know, the euro. Let's look at the euro really quick while we're talking about it. Here's the British pound. They're saying now the betting shops are calling this a little more leaning towards their leaving than staying now. That's obviously not going to bode well for the currency. Next stop down is going to be 140.40 on the British pound. Here's the long-term weekly chart. We're back in the, and this is why I didn't want to play around with this before. A lot of fundamental news comes out, and then, you know, this thing moves quickly. And if you don't have your stops in, this is going to be a nightmare. But right now, I think 140.40's next leg down. So let's take a look at the euro, 112.62. Here's the situation on this. What's going on in Britain and a couple other things going on in Europe right now that we're going to review. The Bund in just a little bit, actually, for a change. 112.94.95. That's going to be a little bit of a lid on this right now. Selling retracements back up into that. And then me looking at the dollar, that 95 general area, euro may retrace back up into 112.95. That's going to be looked at as resistance and support, kind of an inverse reaction. Taking a look at the yen. This is kind of not personally what I wanted to see, but again, that's what those weekly closes are for, getting some confirmations that 110.40. We're basically back down to where we started now. So what do you do? And I've only been looking at this from trying to trade it from the long side. So as soon as we hit our 110.40s, we didn't get the weekly close after we met our targets. You know, it's kind of, we just got to wait and see. And I'm not a big fan of shorting this. So right now, this is still a wait and see on the yen. We're going to talk about crude also a little bit later, but let's hit the Canadian dollar while we're on the currencies. So again, you know, got a new fair auction today in the Canadian dollar. It's pretty thin, 128.50 up top, 127.04 down below. I think we could easily retrace back up into 128.50 and even go higher. So I'm looking at this from the long side more than the short side right now. Let's take a look at crude really quick. And the DAX, I think we're going to head lower on that just to sum that up. So let's hit crude. This is the July contract. So here's the long term on crude. Here's the big time weekly support, new profile. And again, we've got our first profile edging higher here in crude in forever. So a lot of these fair auctions are explored. 45.73 on the July contract. You've got that's long term. That's our long-term kind of retracement back to truck up support area on that. But intermediate support at 48.14, as you can see, if I go into the scanner and I go into the futures section and I stay on WTI, you've got all these numbers right here. There's the 48.14 we just bounced off of. There's the 45.74. All right, so intermediate support here. You know, we've pulled back from what, almost 52 into 48. So we've had a $4 pullback. What is that? An 8% move in crude in the last 3 days. So we could have a little bit of a bounce here. You've got a chance to play defense. We could rally up into the top of the profile, 49.71. So what's the immediate play? I think the immediate play is to look at this with stops below 48.14, possibly retrace back up or bounce back up into 49.71. And I think they could pull the plug on this actually long term and actually revisit or see the bottom of this profile, 45.73 on the weekly. And what does that mean for the Canadian dollar? So I think the leverage right now, you've got better plays in the Canadian dollar, but right now you've got a little bit of a bounce opportunity. Canadian dollar is right in the middle of a fair auction there. Not a lot of leverage. we're going to take a look at one more thing before we finish about crude oil, the XLE. This little move right here is pretty cool. 65.27 is going to be support on the XLE. We obviously have some stocks we can drill down into to trade the XLE differently, but I don't see a lot of big leverage on the long side long term yet for crude, and I've been saying that for a while, but we finally had a pullback. So again, the short term trade, buy support at 48.14 up into 49.71. The long term trade is we're going to eventually retrace back into 45.73 in the July contract. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. So we're in my confusing oil outlook here. Just want to clarify this. 48.14 support stops below in the short term on the bounce side. And we're looking at long-term. God dang it. I hate when that happens. We're looking at long-term on the weekly, a retracement ultimately back into 45.73. So that daily for high is kind of your targets on a little bit of a bounce situation. But that's that's short term on being able to explore the entire fair auction, ultimately down below the 45.73. So if we get back into 49.71, I'm looking to not back the truck up, but just start getting some shorts off on a contra trade type trend north move back down into 45.73. I wish they hadn't have killed this guy, this Mateen guy. They need to kind of use some kind of stun guns on people like that, keep them on life support, and just torture the heck out of them for about a decade. I hate these. Then, we'll get on another topic here. Okay, so let's hit gold really quick. Then he can't get to Allah and have 40 virgins, right, Tammy? These people are sick. All right, so here's the situation on gold on the August contract. All right, so let me back up for a second here. Okay, so the August contract, we're up into resistance now, 1286. Here's the weekly resistance. So you're going to have some resistance here right now, finally. All right, on gold. So here's the daily. So remember, weekly takes precedence over daily on down the line, and you've got a big inflection point here, 1286. You've got to be looking at taking some longs off here, at least part of them, for the first time in a while, actually. Okay, I think we've got Scott from Safety Harbor on with us. Scott, are you there?
Yes. In light of everything that's happening, and I don't mean to sound ruthless or cold, it's a horrible tragedy. But I would think at this point that the firearms stocks would get a bump, and I've never traded them, don't even, I'm not a gun guy at all, so I don't know anything about them. So I was inquiring about that, especially the makers of the AR-15s, Bushmaster and some of those, and I have no idea who the parent companies of those are, but I guarantee you I have an uncle who is a gun guy, and I called him yesterday afternoon. I said, "What do you think about this?" And the first word out of his mouth is, "What I think is I need to get that closet a little more." I said, "You got about 20 guns as is. You never can have too many. I could get cut off at any time." So I think his mentality is probably, if 20 is good, 25 might be better. And they always have this imminent thing, and these gun guys seem to have in their head that they're going to get cut off from buying guns or something, and that they can't stand the thought of being without enough of them. So maybe that's just them. Maybe I'm wrong, but it seems to be in a couple people that I know that they have that same mentality,
Well, let's just kind of go into a different area for a second. Then we're going to come back to some SWHCs, the Smith & Wessons of the world, and the Ruger and Companies of the world, RJR or RGR. We'll take a look at those. Those have definitely been climbing because I have actually been looking at them. And what did you do, Scott, if you don't mind me asking, when 2008 was happening and everybody was freaking out, and rightfully so. I mean, the world was on the edge of a cliff as far as, financial, economic situations. What were you thinking back then? Were you thinking, hey, maybe I need to go buy some guns or I need to kind of get my, what do they call that show where people are kind of barricading themselves and accumulating food? What were you thinking back then?
I was so overwhelmed, to be honest with you, with the fact that I had 3 houses, that I was flipping houses at the time, and I just turned down a deal on one. And always listen to your wife, guys out there. And she said, no, we can get a little bit more. And literally, John, in one weekend, that next Monday, I never had an offer on that house till 2 or 3 years later when it was foreclosed on. So, it's funny how things can happen so quickly like that. It's amazing, not funny. But I was overwhelmed with the thoughts of that and the fact that I was in a lot of different stocks, and I kept holding on. And after that point, I never traded a stock again without I was in Citibank. I was in Bank America. You know, I was in Ford, which went down to $2. But I was never use stops. And it taught me a huge lesson. I lost, probably $300,000. I didn't trade till got back in the market in 2011, and built up some money, got back in real estate, and got a $100,000 loan and equity loan, and that's how I got back in the market. And I trade completely different. And I think, in what's interesting is when I first started trading back in 2006, I used to bump into older guys, and you've heard this. And I'd say, you ask a guy, well, did you ever go to school for anything? Yeah, well, I didn't, but I paid a lot for an education. Well, I got my $300,000 education, and I think that is the only way that traders can learn, because I try to teach people from my mistakes. They won't learn. They have to take a bump. They have to take a spanking.
You're so right about that, Scott. You only learn a lot of times when especially in this scene, to want to try to limit the tuition fees without question, as you know. But sometimes
here's an example. I gave a relative a tip on X, U.S. Steel, a couple months ago, and it was up, and I said, remember, get your stops and everything. It was like $16.50. Of course, in a drop down, I said, what did you lose, like 25 cents? So, no. I'm like, you did put a stop in. No, I didn't. It's down to 14 something. Okay, now it's back to the 7. When it went back to 18 the other day, or 17.50. He calls me and says, well, I got out of the X, so everything's good. I said, it's not good, because if you put in the stop, my friend, you could have bought it when it fell back to the $15. This is why I have found that people won't put stops, because as the stock makes that heartbeat every day, they're just afraid they're going to get cashed out for a few cents. Well, it's a lot better to get cashed out for a few cents than it is a few dollars.
Well, I'll tell you what, Scott, we've got a break coming up. I really appreciate you calling in. I'm going to go over after the break for you a couple of gun-related stocks out there, and I really appreciate you calling in today.
And again, my sympathy goes out to everyone. I'm not trying to sound ruthless, but it's what we do here, and you have to separate the two things, and so forth.
Yeah. Well, thanks, Scott. And guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys. We might get Steve Banger on the phone with us here if we have time today. Steve is again, if you never listened, he's actually sold a clearing firm he had to Revco back in around 2000. Very accomplished individual, has very big options guru. So we want to have him on about this volatility trade. And see what his thoughts are right now with the spread on the volatility of the volatility index and how that may be predicting a little bit of a market turn here, even though we're out of top and still trading above profiles as we looked at earlier. Here's the gold August trade again, 1286. You got to be willing to take some weight off here and kind of regroup, just see what happens. We could have a new daily profile appear at some point. Soybeans, man. Literally astonishing. I mean, we are now a full 300 cents a bushel. 300 cents is $3. Why didn't I say it that way? We're $3 a bushel higher than we were talking about. Here's the weekly. Again, you try to figure out as a trader, when is it time to take profits? And these profiles attempting to appear or locking in are definitely some things you need to be aware of because you've got new inflection points, retracement areas, etc. The bean trade, really, this is our weekly. You've had some situations where you could kind of take some weight off based on that regulation of the long-term trade up. But as soon as we broke out above 1063 again and you kind of came back and retraced it, you've had a chance to get back in the trade. You had a chance to play around with some of these lows down here around 1038. Again, this is a little disturbing that it broke this, but there's no free lunch out there. You're going to have little situations like this every once in a while. It's still not time to really take the trade off. You don't have any new profiles attempting to appear. You don't have any new profiles locked in on the intermediate. And I think we're trying to get Steve right now. Let me make sure they've got the right SPUSA. Let me just make sure we've got the right thing for him. SPUSA is 66. Okay. On his Skype ID. So again, do you take this thing off? Really, it depends on what kind of appetite for risk you have, but the long term and the intermediate, this is the 240. We still could retrace back into 1157. We were starting to get way up there. And remember, the larger the price or the higher the price action, just like the S&Ps. I mean, we're at 2,000 now, so a 10-point move in the S&Ps at 1,000 is a 1% move. 10-point move at S&Ps at 2,000. This is no brain surgery to figure this out. We're talking about a point or a 0.5% move. So the higher you get, the more volatility really is just going to be there by default. And you've got to be, but again, these things are priced statically per penny. So keep that in mind. Just, the volatility is, or the price movement, if you will, is going to be a little larger relative to the value of the instrument period. And I don't know how I messed that up, but I think you get the picture. Let's take a look at the XLF, what's been happening over here. As you've been watching this show, I've not been a big fan of trading this from the long side. This 10-year kind of going into a whole different universe now is finally starting to affect this thing. It's starting to show itself. 2358 short opportunity there. I think we're going to easily see 2204 now. Again, I've been kind of staying away from this as the darling of the ETF world, but now I think you've got some opportunities here, and any types of retracements, 2358, I think you could easily make $1.50 off of this thing on the downside. Okay, let's take a look at Facebook really quick. I'm just reading the den, catching up. Yeah, I mean, Revco. Whew. You guys caught that comment. Actually, that was a weird scene. I mean, did you guys ever see Rogue Trader? You ever seen that film called Rogue, R-O-G-U-E, Trader? Go get it. I forgot. It's kind of a famous British guy was the actor in that before he became famous. Liam something, not Nielsen. Anyway, that's how things spin out of control, and that's kind of what happened at Revco with that one guy trying to bury some problems offshore. That's it, Tammy. Neeson. I don't think it was him. It was another guy, another British guy named Liam. But go, if you can, I don't even know, go look at it on YouTube. Rogue Trader. That's how things can spin out of control, and he ended up blowing up Barings Bank in London. I think we got Steve now. Steve, you there?
I'm here.
Hey, man. Good to have you.
Yes, it's Nick Leeson.
That's it. Nick Leeson.
I know him.
Do you?
I do.
Wow, cool. How'd you like that movie?
I never watched the movie.
Really? Okay.
I watched the movie. I will tell you. I mean, that's obviously subject of a completely different conversation, but completely. I know Nick. I actually used to work with him.
Oh wow, cool.
Yes.
Do you remember when that happened? That was back in the
1989, 1990.
Yeah, I was gonna say late 80s.
Somewhere in that 80s, somewhere in that period.
Isn't it funny? Like, what was that a total of? Something like 6 or 7 billion, or 3 or 4. I mean, that's like pocket change now, losses.
Yes.
That's what J.P. Morgan pays in monthly fines at this stage.
Yes.
Yeah. To put it in perspective.
It was Barings Bank, right?
Yeah.
And, it was never one of the biggest investment banks in the world, but it was a really good second-class player. So it's a meaningless amount in this day and age.
I know. Well, listen, we were talking about this volatility of the volatility index this weekend. Can you stay? I mean, we got to go to break in a minute, but can we start that conversation and then finish it next break? Okay, cool. I'd love to hear your thoughts on that.
Yes. So there's an instrument out there which is the ticker symbol is VVIX, so WVIX.
Okay.
And it reflects the volatility the volatility curve of S&P options. So when the implied volatility of S&P options gets higher, so I'm not talking about the actual calculated volatility, but the volatility which is used to price the S&P options. So when that volatility curve starts to expand, the index goes up. Conversely, when the volatility curve goes down, the index goes down. And on Friday, something very interesting happened, whereby even though the market kind of like came back into the close and rallied, the volatility curve continued to expand into the close. And that is something which is very unusual.
Wow. Hey, listen, I hear the music. Can you hang on till after the break?
Sure.
Thank you. Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Steve, you still there?
I'm right here.
Great. Hey, listen, on that topic, I'm showing in e-signal. I'm showing the VVIX. Are you showing the prints around 103.78? Is this the right one?
Yeah, I have the last one at 102.75.
Okay, so this morning, yes. Okay, so I think I'm a little delayed here. Well, can we continue that conversation about what you were saying was the anomaly going on there?
Yeah, absolutely.
Okay.
So, I mean, usually volatility and the market are in lockstep inversely related. So it happens very rarely that there is diversion. And we saw a diversion yesterday into the close, and we actually saw another diversion earlier in the week. So where the forward volatility was actually up on a traded basis, which is the VXX was up, even though the market was actually up too. So usually it's inversely related, right? So those two things indicate usually that there's a little bit of, let's call it a storm, is coming. It's always debatable how much of a storm it is going to be at the end of the day, and it usually signals additional declines.
Yeah. So what, in a nutshell is Steve saying that there's an anomaly going on, there's a diversion or divergence happening, and as we look at these things, historically, those are, can be high probability leading indicators for some type of change in tone and what's going on in the current market landscape. And I'm looking at this VVIX right now, Steve. This is a pretty serious change of event. I mean, it's really, overreacting, which I guess is proving your point, to what currently is a little bit of a pullback off all-time highs. So
yes, absolutely, and that. Yes, yeah. And just to strengthen that point, if you can pull up a VXX this morning, I don't know if you if you can let me that one. It's VXX. Let me do that. The interesting thing about the VXX this morning is that it's actually up right now 3.89% over Friday's close, even though the actual market is only down 0.3% this morning right now, and that is very unusual. I mean, that is a real diversion. I mean, those things are usually inversely correlated, and the relationship is not as dynamic as it is now. So that would also indicate that we're going to have additional weakness today. There's going to be some selling pressure, I believe.
Yeah, I don't know if you can see my screen right now if you're looking at the website,
yes.
But to prove your point and what kind of actually situation this may be, VXX, I'm looking at the trail down that's really happened and just this thing kind of getting hammered over time. 1397, we're actually trading above profiles for the first time literally since February 2016. So this is along with what Steve is saying, just from a price action standpoint, we've actually got a break of profiles on the VXX. Keep this in mind. This is an indicator you can't ignore, actually. Steve I'm going to just kind of defer to him on all the volatility plays. But 1397 now is going to be support on that VXX product. This is a short-term futures component relative to the VIX. So, Steve.
Yeah, and it's always... Sorry, go ahead.
No, I think this is great information for people to be aware of, because we're looking at the internals also right now, and we're getting ready to have a mixed long-term, intermediate-term breadth on the S&Ps. Man, I hear the music. We got to end the show. Thanks for coming on, Steve.
All right, thank you, John. Talk to you later.
Great.
Bye-bye.
Guys, have a great day. Stay tuned. It's good to be back. We'll be here all week. Stay tuned for Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.